Through this video, we have tried to simplify and explain GST. The source of this information has been collated from the data available on public domain. This is our interpretation, issued in the public interest. Topics we will cover are: what is GST? How will it work? How will it benefit the consumers? What is GST? Goods and Services Tax. We all know that, but what does it really mean? We will explain this and make it great and simple tax. Let's take two scenarios, pre-GST and post-GST. For the ease of calculation, let's put some fixed variables in: 10% profit, 10% tax, and round off all the numbers. Pre-GST, the cascading effect of tax. Let's say the cost to produce raw materials is 83 rupees. The producer adds his 10% profit, which brings the price to 91 rupees. On 91 rupees, he has to pay 10% government tax, which brings the price to 100 rupees. This raw material is bought by the manufacturer at 100 rupees, which is his input cost. The raw material is then processed and made a finished product. He adds his profit and is willing to sell it for 110 rupees. On this, he has to pay 10% government tax, hence the price comes up to 122 rupees. 122 rupees becomes the input cost for the wholesaler. The wholesaler adds up his costs of storage, etc., and along with his profit, the price comes to 134 rupees, on which he has to pay 10% government tax, hence the price comes up to 147 rupees. The retailer buys the finished product for 147 rupees. To sell this stock, he spends money on marketing and adds his profit. Now the cost comes to 162 rupees. On this, he has to pay 10% government tax. So finally, the price of the finished product comes to 178 rupees. This is often referred to as MRP, or maximum retail price. All taxes are included. So, as the consumer, you end up buying the finished product for 178 rupees. This is the result of cascading tax effect. The final burden of tax is levied on the consumer. Now let's look at the post-GST scenario. So, the cost of producing the raw material remains the same at 83 rupees plus 10% profit gets the price to 91 rupees. On this, 10% government tax works out to be 9 rupees, which adds to the cost, and therefore the price comes to 100 rupees. Here is the difference. GST tax will be collected at every stage, hence the producer of the raw material will now have to pay 9 rupees to the government. The manufacturer still gets the raw material at the same price as before for 100 rupees. With his expense and 10% profit, the price comes to 110 rupees. So the total price is 110 rupees. On this, he has to pay 10% tax, which comes to around 11 rupees. But since the producer has already paid 9 rupees as tax, the manufacturer now only has to pay the balance, which is 11 minus 9. That is 2 rupees. This is the tax liability. In GST, there is a way to claim credit for tax paid in acquiring input. What happens in this case is, the individual who has paid a tax already can claim credit for this tax when he submits his taxes. Hence, he adds only 2 rupees to his cost of 110 rupees, which makes the selling price 112 rupees. The wholesaler buys his stock at 112 rupees, adds his expenses and profit, which gets the price to 124 rupees. 10% tax on that is 12 rupees. Since the tax is being paid at every stage of transaction, he is liable to pay 12 minus 11 equals to 1 rupee as tax to the government. This is added to his cost, which makes it 125 rupees. The retailer's cost of buying is 125 rupees. After adding the expenses and profits, the price comes to 137 rupees. 10% tax on that is 14 rupees. His tax liability comes to 1 rupee, which he adds to the cost and puts it up as MRP of 138 rupees. So now you, as a customer, will have to pay 138 rupees only in the new GST regime, as compared to the previous tax scheme, where all the tax burden was on the customer, and you were paying 178 rupees. That's a huge difference. Let's look at the other benefits of GST. 1. Transparency in the system. 2. No hidden taxes. 3. Positive impact on prices of essential goods and commodities. 4. No double taxation. 5. Benefit to the customers, no cascading tax effect. This video is brought to you by Infinite Graphic Solutions. We create explainer videos to simplify complex theories.